Hey traders, hope you guys are doing well. In this video I'll be breaking down the trade that I took in ICICI Prudential. So let's get started. First, when I was going through my watch list, I caught ICICI printing a particular pattern, which was this one, right? Which was this pattern, and I noticed it in the weekly time frame. So, and I saw that price had given a very impulsive bullish move and then has been slowly correcting. So in order to make sure that other factors are also aligning with the current action, I quickly shifted to the higher time frame, which was the monthly, to check the overall bullish structure. And what I saw was ICICI Prudential had a decent bullish structure and had been trending upwards. Market structure will not be shown in charts like it is in the textbooks, but I'm sure if you've been charting for quite some time, you might understand what I'm saying. But for the others that don't understand, what I mean is that structure is not always gonna move like this, like how it is shown in the textbooks. I mean, this is bullish structure, so it's not always gonna move like this. In fact, it'll probably move like this and slowly start to build up, right? So if you can see that it has had minor downtrending, downtrends in the minor time frame, but if you see the overall structure, it's been bullish. Now it started at 35, means it's at 599, so it keeps moving up, right? So that's what I mean by, it's not always like it is in textbooks. So I hope you guys have understood what I meant by that. So if you see ICICI Prudential also, it's moved like this, and see, it created a lower low during the corona crash, and again it's trending upwards slowly. And I saw the monthly time frame also being bullish. I switched on to the weekly time frame and saw this continuation pattern. So I drew this pattern, that is the consolidation phase, and as usual I was waiting for price to break out. So as I was waiting for price to continue its momentum, like after the consolidation phase, I saw that price broke out of this particular resistance, right? Which this is the resistance and this is the support. So price broke out of this resistance, and my entry point was exactly at 528.95, and my SL being 496.60. And I was actually waiting for a 1:3 to capture a 1:3 risk to reward ratio, but in the middle I saw this bearish impulsive move and I exited the trade at 1:8, which was around 588.55. And yeah, so the reason that I exited was the markets were, nifty, mid cap, small cap, everything seemed to be like a little bit at the starting stage of being bearish, and with all these economical conditions and geopolitical events happening, I was kind of skeptical to hold this trade. So that's the reason I exited at 588.88 levels, and I only caught a 1:8 point moves. But see, even 1:8 is a good risk to reward ratio, so I'm happy. And now you can see that price fell and it's come back to its original price. It is what it is. I've at least captured a good move. It's my job to manage my risk and make sure that I cut my losses and try to book as much as profits I can. So basically this was my analysis and trade for ICICI Prudential, and I hope you guys have understood my analysis and execution. Please don't forget to like and let me know in the comments if you have any doubts, and I'll help you with it. So cheers, and see you all in the next video.